Dinshaw, hi. You did speak about platform companies, and I'm intrigued to know your opinion on Zomato versus a Swiggy. Now that both those earnings are out, Zomato mixed, Swiggy slightly weak. Where are you placing your bets?
So the fact is that there's no both are equal. Right? I mean, both are equal as in we like both the companies. Obviously, we like Eternal more than we like Swiggy because of the way he's gone about approaching the competition. But don't forget that even China has two-player market, Pinduoduo and Meituan. Meituan is a major there, and Pinduoduo is the other guy who is the smaller player there. But the fact is that there's enough potential in this market. In food delivery, obviously, it's going to be a two-player market, and both these guys have been around, right, for a while, and they've proven their mettle. In fact, no other player has been even coming about in the food delivery. But in the quick commerce space, you're seeing a lot of competition coming in. But please notice that the quick competition, the quick commerce, where the competition is coming in, they don't have a food delivery business to offset the losses that they are incurring in that and constantly raising money in that particular area. So that's why we'll stick to these two. However, as I said, that our favorite is Eternal. Swiggy will always be on the back burner for us, but we're comfortable with both as of now.
But Dinshaw, Eternal was great at the 40, 50 odd share price that you discovered it at and put in money there. But what about the current valuations? I mean, for those who are looking to maybe add positions or even buy afresh, is this the right price?
So, Aisha, I'm not recommending anything, but as I said that we constantly keep adding. Whenever we see some small correction, also we add to that particular name, and we see whenever we see fresh flows, we add to that name because we want to keep the weightages of where they are, where we are in the Eternal as such. So that's why. But this is no recommendation to buy or sell. But we always have when you develop a portfolio, you develop you try to run a marathon in a relay fashion where you try to see that one set of leaders is in place when the other set of leaders tie around. I think that's how you develop a portfolio, and that's what we're doing with our portfolio as such. So I'll leave it here.
Right, okay. And Dinshaw, last time we interacted, I believe you were slightly negative on IT. Now, given the way IT earnings have panned out so far, do you believe it's now a good time to relook at IT, or do you continue to be slightly negative?
Well, you're being very polite by saying slightly negative. I don't think maybe you were slightly negative. You were very negative on IT, and we continue to be very negative on IT because we believe that, frankly, I mean, what are we talking about here? A growth rate of mid-single digits with Ps of mid-20s. I don't think that's exciting at all. I mean, in India, GDP is going to grow in low double digits. I mean, I'm talking about nominal terms, right? So where is the excitement in this particular sector? And secondly, as we've always been stating, that AI, we believe, will be a big disruptor out here. The whole equation that we've been following for the past 3.5 decades, that has come up for question with AI in place as such. And I think we need a reset there. And probably that reset, I don't think will be a very happy reset. It will be a painful one as the reset progresses. After that, probably we'll look at that sector, not before that.